I'm your host, Carlo Cardilli, Head of Product at Alpharank. Welcome to our conversations around best practices for growth for your financial institution. I'm delighted to be sitting down today with Kevin Dawson, Head of Marketing at Omni Financial. Welcome, Kevin.
Mahalo. Thank you for having me.
So, for those who are new to the series, Alpharank is a guidance system for the online branch. Our clients increase their loans and deposits by at least 50% in the first 6 months without spending a single more extra dollar on ads. Alpharank keeps your activities focused on the highest dollar output from your online marketing. Any marketing campaigns you run, whether it's a targeted email, a postcard with a QR code, or a Google ad, we tell you exactly how many dollars you booked from that action, and most importantly, how to get more dollars for that action. Our system is trained on over 6 billion first-party data points from over 150 participating banks and credit unions. And from this model, we give you recommendations, data-driven, to curb abandonment, improve lead quality, and maximize dollar production. Everyone in the audience can get a free trial to Alpharank to see how this works with your own data. Visit us at alpharank.ai to learn more. So welcome to everyone in the audience today. We want your participation. We want your questions. Are you going to be in listen-only mode at first? Please submit your questions using the Zoom Q&A panel. When we get to the Q&A segment, we will unmute your line so you can ask your question live and have a real interaction with Kevin. Or we'll just read it out for you if you're too shy. All participants will receive a follow-up email from Alpharank with links to the recording and other information from the discussion. So first, Kevin, welcome. It's thrilled to have you.
Absolutely. Thrilled to be here.
I'd like to introduce you to the audience. I hear you're a little bit of credit union royalty. So tell us about how you came into the financial institution space from a very early age.
Yeah, absolutely. So mom and dad worked in the credit union industry in marketing. So financial services, marketing, the credit union industry. They also worked
it's literally in your DNA.
Yeah, and community banks, by the way. So it was literally in my DNA. So at a young age, dinner table conversation was, economics, banking models, the difference between a bank and a credit union, and other such, fun things like that. But yeah, at a very young age, I understood, the business model behind banks, how they worked, differences between, the large players, the smaller players, credit unions versus banks, and the whole gamut.
And what was your journey? I mean, before we get to where you are today at Omni, give us a little bit of your previous roles and experience.
Sure. And I'll try to frame my journey in context to this conversation. So, the revolving theme will be, marketing acquisition, driving down ROI and things like that. So I'll stop off on points that I think are relevant, as to not, have this sound like a job interview. So my first internship and job out of college back in 2008 was for a software development and digital ad agency. So I was an account executive and a sales rep. It was in the midst of the Great Recession. So as you can imagine, there weren't too many companies that were looking for $500,000 to $1 million, software solutions or e-commerce solutions or things of that nature. So I had a lot of downtime while working there. But what I did is I formed relationships with, the developers and the people in the organization that were actually doing the work. So I understood and learned what I was selling. So I learned how to build WordPress websites. I became fully fluent in HTML, CSS, e-commerce, SEO, and SEM. And, from 30,000 feet, it's crazy looking back on your career that little did I know that this, low paying job would really set the foundation for, the rest of my career. But yeah, at the end of the day, what it taught me was how to make a buck online.
Yep. So you ran your own, I think, QSO SASE loan startup. You were then at California Coast, and now you got picked to run marketing at Omni Financial, which is quite a special kind of organization. Tell us a little bit more about Omni, and I don't think it's a well-known name in the space, but there will be.
Absolutely. So Omni Financial has tremendous history. We're a specialized military lender. Our TAM, our total available market, or addressable market rather, is active duty, career retired, and DoD employees. The story behind Omni is actually pretty remarkable. The original founder of Omni fled Nazi Germany, fled Austria in the 30s to come to America, only to join the army and fight in World War II against the Germans. He stayed
Wow.
in yeah, it's a crazy story. When I first was onboarded, and my boss told me that story, I was like, that is a great emphasis of marketing, right? But he saw a need in the space for specialized lending to the military
Hmm.
community. I mean, the military community is unique and they have their own issues, namely like PCS moves. They could be
Hmm.
restationed at any given point in time, need emergency funds um, for things like that. So he started the company back in the 50s. He ran it, I think, up until he was 95 years old. Great career, great legacy. He passed. His wife ran it for another couple of years after that. And then it was picked up by my current employer, is picked up by a private equity group. They
Hmm.
saw a tremendous opportunity in the company, not only for the legacy that they have built, but the opportunity to modernize the way that they did business for scale and growth.
Right. So somewhere in between a credit union and a bank, really. Uh,
Somewhere in between a credit union, a bank, a startup, and a fintech. It's quite the interesting mix.
but regulated because there's special provisions around military lending. So,
Oh, of course. So yeah, we're fully regulated by MLA, the Military Lending Act, which gives us a cap on the rates that we could charge our service members. We run the full spectrum, so we lend from A plus prime paper down
hmm
to subprime.
Yeah, so quite a range of profile of your borrowers. And I think the other interesting part of your business is you've really got three segments. You've got acquisition, you got refi of existing loans with Omni, and then you've got returning borrowers, the people who come back.
Right.
So, so TAM, which is not huge, geographically distributed, right? Because it's some states, not every state.
We're licensed in 27 states.
That's right. And so tell us a little bit about what's important to be able to find the bookers versus the lookers in the military lending space.
Well, yeah, absolutely. I mean, going back to our TAM of 3.8 million people, and I mean, we're in the majority of the largest states in the country. So let's just say 3.8 million people out of 150 million. Somewhat of a
And
needle.
Dwight, you're not just purely online. You have service centers around some of the largest military bases, right?
Correct. We have a branch network of 16
Yeah.
branch locations, full call center, you know,
Yeah.
the whole kit and caboodle.
Hmm.
But in terms of finding lookers versus bookers, it's important for us to find people who are actually in that TAM, people who are active duty, career retired, or DoD employees. And there's a number of tactics that we employ to do so. So with with Alpharank, and if we're going to just speak generally in Google, what
Mm-hmm.
we do is we consider someone in our market, in our funnel target. So we tell Google that we want to convert off of target. Every single day we run an SFTP from our actual business results, and
Mm-hmm.
then that goes into Alpharank. SFTP runs at about 2:30 in the morning. It's fed and populated into Alpharank at around 9, and then that offline rich enhanced conversion data, so that's click ID, and limited PII to create a better profile.
Mm-hmm.
So phone number and email address is fed back into Google in the form of offline conversions. So you could look at the funnel. I mean, at one end of the funnel, you have a click. At the other end of the funnel, you have a funded loan and acquisition. So in our business, given the fact that our underwriting standards are pretty open because we serve
Mm-hmm.
subprime,
Mm-hmm.
we see the best return converting on target, meaning
Mm-hmm.
we see the best return on telling Google, go find me an active duty military personnel. Go find me someone who served in the military for 20 plus years or who is a DoD employee. Because
Mm-hmm.
at that point, again, given our underwriting criteria and the fact that we're A plus to subprime, our approval ratios are pretty standardized and our look to book
Mm-hmm.
ratios are pretty standardized across the board.
Yeah, if I can just double click on that, I think what's really interesting from your perspective, but also applies to a lot of financial institutions, is that the traditional method is to pay Google per click, and here's $15,000, $1.50 a click. Google will give you 1,000 clicks. But in your case, and in the case of many other credit unions and banks, somebody might put Omni Financial or just Omni in their search bar, but they're not looking for you. They're looking for some kind of other kind of Omni. They click, you've paid for that. That's no bueno. So what you're saying is really about shifting the incentive to Google, not so much to giving you a click, but to giving you an approved application. And then it's up to them to figure out what it is that's going to get you an approved application. But you just shifted the incentive to only stuff that's going to A, end up in your funnel, and B, that you're actually going to be able to like.
Yeah, and to back up the argument with some stats and performance, once we implemented this, we call it our ineligible rate, right? The people
Mm-hmm.
who do not meet target. We were at 75% target. And once we implemented this last month, I believe our target in Google alone was 89%.
Mm-hmm. Mm-hmm. Yep. Yep.
So
So it's really,
if you factor that in, that's significant to the bottom line and customer acquisition cost of our business.
yeah, that's exactly it. You've narrowed it down, and no more lookers, but let's get the bookers. So with this, visibility into down funnel, how are you using that to refine your campaigns?
How are we using that to refine our campaigns?
Yeah, that's right.
Well, it's much in the same way. So, I just explained, the setup that we have currently now. So we have Alpharank feeding in the data from the different sources. So we capture click ID. We're tying that to real business outcomes on each and every day, from funded, approved, target, FICO score, you name it.
Mhm.
And then we feed that data back into Alpharank, and then we take that data and automatically upload it into Google in terms of offline conversions. So
Maybe
what
like
that,
maybe I should have said it a little bit differently. I don't think I was very clear.
yeah,
Um, I hear that you've been able to really um, rationalize and reduce your Google ad spend by a huge factor while maintaining the output. So spend less, basically get more. So you must have gone and found the fat, trimmed the fat, slashed the fat. So tell us about that.
Yeah, absolutely. So using that methodology, what really separated us was the use of enhanced conversions in Google Ads, which you gave us the ability to do, matching not just the Google Click ID, but the phone number and email really creates a much stronger profile for what Google is going, and looking for. So we saw 30% increases in conversions just when we switched over to enhanced conversions. So on top of that, once you go to enhanced conversions, you know, the attribution that we see through um, Alpharank versus what's in platform with Omni gives us a much better direction on where we should spend the money, right?
Hmm.
Because in Google, that they'll have a pixel fire on an application complete, whereas with you, it's last paid click. So
Hmm.
if you're just to look at it at pixel fire, you could decide where you want to spend your budget based upon where the most apps are going. But with the last paid click attribution methodology, we could see a shift towards, what, maybe brand isn't really driving the volume. Maybe it's
Hmm.
Performance Max that utilizes YouTube, the whole suite of products essentially within Google. And the same
Yeah.
thing with generics. So like generics, military loans, and things like that. So it gives us much more flexibility and visibility into the account on what campaign is specifically driving what
Hmm.
volume. And
Hmm.
then from there, it's just pretty simple back of the napkin math. What's producing volume at a CAC that we can absorb?
Yeah. And talking about this cost of acquisition, um, I think this is the latest from your end on where you've been able to take the cost of acquisition. Basically, since we started in the spring through lots of experiments and trying to push the envelope as to how much you could really push Google downwards while still maintaining volume.
Yeah, absolutely. So yeah, well, when we first started, I mean, there's a couple other things that we did in the account. We did a lot of consolidation in the account. So when I initially took over, there was 46 different campaigns running, which is way too many. So we did consolidation
Hmm.
and isolation, right? We had specific brand campaigns, specific PMAX campaigns, and
Right. It's,
specific
it's just like
generics
trimming your
loan.
stock portfolio and getting rid of all the losers, right?
Yeah, I mean, yeah, and also giving Google the ability to perform to the best of its ability. Because the last thing that you want Google to do is start to cannibalize your campaigns. You want your
Hmm.
brand campaign to only go after brand keywords. You want your
Right.
PMAX campaign to be siloed and only going after that subset. You want
And
your
so
generic
I want to pause
loans.
on that. That's super important because if
Yeah,
you don't set up PMAX right, PMAX will start, bringing in sort of brand traffic at a much higher cost, make the brand campaigns less effective. You're going to spend a ton of money in PMAX, and then you're going to wonder, what happened to the results.
yeah, absolutely. So the first thing we did is siloed. One, took the number of campaigns from I mean, at one point it was 49 prior to my time. I think it was 26, 29, but whatever. We brought it down to three and specifically siloed those because, again, if you don't silo, to your point about PMAX or generics loans, which in our instances, military loans, Navy loans, things of that nature, if you don't silo those, you end up competing and bidding
Hmm.
against yourself. And once you start
Right.
competing and bidding against yourself, you're there boosting the CPCs, right?
Hmm.
You're
Hmm.
providing more. You're just competing against yourself and driving up the cost per click. And
Remind me,
also
what's your average cost per click?
oh, it depends. So on for branded keywords, our average cost per click could be anywhere as low as 88 cents to a buck
Mm-hmm.
75. It all
Mm-hmm.
fluctuates on market demand and what our competitors are doing in terms of conquesting, meaning what our competitors are doing and bidding on our branded keywords. PMAX is about $1.47. And
Mm-hmm.
then the generics loan category is mixed up into four different ad groups. So we have like generic personal loans, military loans, Navy loans. And as you get more finite into like, you know, military personal loans, those could be $10 per click. But the
Mm-hmm.
conversion rate is, 50%. So
Right.
we'll get an application in for $20, right?
Right. And that's
Um,
that's a really important part. So looking across the whole ecosystem, we're finding that people typically get the best results in that range you mentioned, a buck 50 to 250. And if you want to go higher, that really means you have to be very careful about the targeting and watch the down funnel conversion rate.
Yeah, yeah. I mean, it's definitely targeting and having control over your UI and your UX and really understanding your full funnel and where the drop off occurs, right?
Hmm.
At one end of the spectrum, we have cost per funded loan or acquisition. The other end of the spectrum, we have a click. And in our industry, there's a lot in between, look to book, approval ratio, completed application, and then you have your application. What's the drop off rate? And, the different segments of your application, then landing page performance, and you ultimately go back to click. So if you don't have those dialed in properly, through proper use of data and targeting, those acquisition costs get out of control rather quickly.
Hmm. Hmm. So, Kevin, just a little longer than what, 7 months on the job?
It will be, what is it, 7 or 6 months? I started April 1st.
Wow. All right. So it's 7 months. Um, 63% reduction in cost per funded loan uh, in a market that is very competitive for the reasons that we've talked about. So how did that change the role of marketing with respect to the C-suite?
Well, I mean, it changed it a lot. I mean, given the fact that we're um, private equity backed, the CEO of the private equity firm is also the acting CEO of Omni Financial. So everything is performance data driven, right?
Hmm.
So the ability, and you were the first partner that I brought in. So the ability to
Thank
partner
you.
without,
We appreciate the vote of confidence, Kevin.
yeah. Well, I mean, I had to. I mean, it gave me instant credibility. So the ability to show the C-suite to be able to break it down again in silos. Here's our organic traffic. Here's our Google paid traffic. Here's Bing traffic, social, programmatic, affiliate, QR codes, you name it, and to be able to silo those out and give them a full picture of really what's happening in our advertising ecosystem gave them great confidence on the strategy moving forward. And more than that, they really quickly understood what were the different acquisition costs that we're paying for those channels. So in a way, I mean, it gave me instant credibility and also gave us a fantastic starting point to develop the strategy for the business, in the near term, 30, 60, 90 days, and then also looking forward, into the coming years.
Well, great news is you got the cost down to probably the lowest cost per funded app that I've seen in the last couple of years. I think my big question is like, where do you guys go from here?
Where do we go from here? Well, I mean, the good news is, I mean, we were very, very heavy in Google Ads. So the good news is coming in, fixing our Google Ads account more or less, making it much more efficient, and being able to spend 40% less in Google while maintaining the same levels of funded loan volume means that we could take 40% of that large budget and start spreading it across different advertising revenues. So what we're looking at is, we're really, really hypersensitive to acquisition costs, ROI. So the next step that we're taking is we're using that leftover budget to go into performance-based advertising. So affiliate advertising, influencer advertising, and things like that.
Yeah, all targeting the military.
Correct.
Fantastic. So at this point, I'm going to throw it open for questions. Folks in the audience, just drop in your questions through the Q&A panel in Zoom. We will pick up those questions and try to have Kevin answer them to the best of his abilities live. So, Elizabeth, what do we have that's come in?
Yes, hi. We have a few questions here for Kevin. And if anyone else would like to talk and ask Kevin any questions directly, please raise your hand and I can unmute you as well. So to begin here, Kevin, we have Karen from Firefighters Central. She says to you, I've heard that Google penalizes you when you cut spend. In your experience, is this true? I've wondered if that's just something my rep and my agency say to me to keep spending on Google. Also, I'm not sure about the return on investment.
Okay, so the latter is true. In my experience, I've worked from the lowest level of reps at Google all the way to the head of sales, and something we have to realize about their business and how they make money. Your Google reps are salespeople. They are paid on your spend and they're paid on adoption of new products. So that is certainly something to keep in mind. Apart from that, there is a sense of alignment that you need to create with your Google reps because they understand that the more you spend with poor results is going to mean you're not going to spend money with them anymore. So they will try to work with you as much as possible to develop what we're talking about here, these down funnel techniques that provide strong ROI and acquisition figures. But if you don't stay on top of them to provide, that level of visibility, that capability, then it could become a runaway train. So the whole thing with Google, and I've been in this situation numerous times, is if you start spending less, their threat is we're going to pass you down to the lower rung of customer support and you won't have access to all of the great stuff we have. I would completely block that out. You are not penalized. These, again, a lot of them are experienced marketers, but again, they're salespeople. You are not penalized. And I could also tell you from experience that the level of support that you reach across Google is largely the same. So if you do spend less money, and if they do follow through on their promise to, demote you to the lower rung of support, you're gonna actually find out that level of support is just fine. And you're also gonna find out that next level of support is also begging you to spend more money.
Thank you for the insight. And here we have a Cole Clement has raised his hand. So Cole, I believe you can talk now and ask Kevin your question.
Hey, Kevin, really appreciate you jumping on with this. I've been lucky enough to have the Alpharank team bring me on as well, and it's great to hear other financial institutions utilizing Alpharank. I had a question about remarketing. That's a part we're starting to go down. Really, the past 2 years has been working with Alpharank to really utilize our main search campaigns, but I'm starting to go down the road of remarketing now. What's been your experience with that, and kind of any tips and tricks that you've done going down that road if you have?
Oh yeah, absolutely. So we utilize remarketing through social channels. We utilize remarketing through programmatic and also remarketing through GDN and the tools that are given in the Google suite of products. To answer your question, remarketing is certainly important. to maintain your brand in the consideration set as they're shopping for, either a checking account, auto loan, or a credit card. But I think it's important to differentiate, retargeting and where it fits in the funnel in your marketing strategy. So I consider remarketing as more of a top of funnel behavior that will ultimately drive customers down into, your branded keyword search or organic search, which is where most people end up checking out and fulfilling. So I find it as an extremely important thing to do, something that I would incorporate with all marketing strategies. But if you just judge remarketing based upon, like if you just siloed remarketing and judged it based upon spend, applications in, and funded loans, it's not going to paint the broader picture, because the real purpose of retargeting is, again, to get you back into that upper funnel, back into that consideration set. And then where it's ultimately going to fund and convert is at your branded keyword level or organic search level.
That's right. So when you crank up the remarketing, what you're also going to see is a correlated increase in organic volume and branded keyword volume.
Yeah, absolutely. And Cole, I could just speak from experience from what we're seeing right now. And again, why, pressing on the importance of retargeting, we have 4.7 digital touch points before someone completes an application in Omni. So that digital touch point could be an email, it could be SMS, it could be retargeting, it could be a YouTube ad. So having all that out in the ether, if you will, is very, very important to bottom line conversion, even though it may not represent it if you silo it out independently.
No, I appreciate that context. Yeah, I think Alpharank such a powerful tool to show us funded loans, but again, it's always getting back to making sure that we're hitting the brand side of things too. I know for someone that, like myself, that's very analytical and likes to see those numbers come through, I think it's a good reminder to kind of go back to the larger top of funnel brand and know that's going to lead to more conversions down the road. I appreciate it, Kevin.
Yeah, I mean, and I could add on one more anecdote to that. So Omni, given the fact that, we have a smaller brand, we use similar techniques that, we'll use Google demand gen, like YouTube advertising, to boost brand, like, our brand awareness, essentially, because there's only a finite amount of searches for Omni Financial. So we'll use some of these techniques to artificially inflate the number of searches and awareness around Omni, so we could then down funnel capture them for those branded keywords. So yeah, top of funnel, very, very important for brand. And like Carlos said, it's ultimately going to result in driving more organic traffic and more branded keyword campaign traffic.
For sure. Thank you, guys. I appreciate the time.
Yep.
Fantastic. Thank you, Cole. Elizabeth, we've got time for a few more before we have to let Kevin get back to the business of cranking out personal loans. So
Yes. Okay, we have a few more here. So Kevin, someone wrote in, can you speak a bit more about using a performance max campaign? The lack of control over the tactics has been a bit of a roadblock for some.
Wow. Where do I start with that? Yes, performance max. The good news is I know Google is starting, they've heard their customers loud and clear, and they are starting to roll out more visibility tools into Performance Max. But you are exactly right. Performance Max provides very, very little visibility. They do have beta tools now, and I would ask your rep this, that shows the flow from, say, someone seeing your YouTube ad or your Discover ad or your Gmail ad to your search ad. And it actually kind of shows, the flow of traffic essentially through PMax. But until we get full funnel visibility from PMax, I treat it more so as, a mid-tier or top of funnel marketing technique. And also, again, to go back on something I said earlier, using Alpharank and using last paid click as attribution, what we actually see that's actually given us more visibility than what Google's shown us in platform, because we could actually see that Performance Max is driving value, that those clicks and those views on YouTube are converting actually into completed applications and funded loans. So I hope that provides some insight. I know PMax is frustrating. We deal with it every day, but Google promises to fix all these stuff. So let's
I think at the end of the
let's see
day,
when they do that.
it's a sort of value-based question.
Yeah.
Try a PMax campaign. If it works and it generates a positive return on ad spend, and if it's better or comparable to the other tactics, then great. Treat it as a bit of a black box. And if it doesn't, tell your rep that it's not working and give you access to these beta tools. But I think the most
Yeah,
important thing is
I
to
think
avoid
also
it competing with brand. Because if brand and PMax start interacting, like you're competing against yourself, and you're going to end up paying essentially more for those very cheap branded terms that you were gotten for cents on the dollar. So
yeah, and I'll add two important points to the PMax question. And first, touching on what you said, Carlo, about competing for brand. Number one, in PMax, there's an exclusion tool in the campaigns. Make sure to exclude your brand from PMax, so it keeps PMax, and brand. And then number two, certainly use offline conversions in PMax specifically to go after whomever you deem your target, right? It could be someone with 700 plus credit. It could be someone who was approved. Whatever in your institution you're finding the most value, make sure you use that online conversion data uploaded to PMax to keep it honest.
perfect. Thank you.
Thank you. Okay, we have two more questions here, and then please, anyone else, raise your hand if you'd like to talk and ask another question. So Kevin, Jeff from Security First, can you comment on your allocation of budget between brand and non-brand? Are Google brand terms just picking up traffic that I would have gotten anyway because of my awareness campaigns?
Very good question. Very good question. So the allocation of spend in brand versus what we do elsewhere, I would say it's about 1/6 of what we spend on brand. But also, mind you, brand is by far our best performing keyword category. And there will certainly be some cannibalization, because people are going to be searching for your brand and they'll end up finding you ultimately. But it really comes down to conquesting campaigns. Your competitors are buying your keywords and are going after you directly. So as a brand, and as I see it, it's our best performing campaign. It's the catch-all bucket for all of our other top of funnel marketing campaigns. And it's a way to defend our brand and stay top of page, top of mind when people do search for us. If you could think about the top of Google as real estate, when someone searches your brand and you have competitors out there trying to eat your lunch, essentially, you want to be prominent. You want to take up the most real estate that you possibly can. I mean, sure, as you scroll down the page, you are going to populate number one for organic search, but you also want to populate number one for paid search as well. And how we rationalize that at Omni is for, our actual acquisition cost for branded search for our personal loan portfolio is anywhere in between 20 and 30 bucks. So the money that we spend in brand for 20 or 30 bucks to defend ourselves against our competitors is a no-brainer.
Yeah, I think the way I would look at it from a budgeting perspective is you take your awareness expense, you take your brand spend, and that is the total cost. And then you divide into that, the applications that are approved that you got from direct traffic organic traffic and the brand keywords as a whole, because they all sort of work from a sort of common basis.
Yeah, and another thing I'll add to that, it is a really good question and something that we had to, find what that line was. Again, for your own brand, there's going to be a finite, I mean, everything Google, there's a finite amount of searches. So there's two things. You don't want to overspend in brand, because what you'll ultimately end up doing is hiking up your own CPCs for a brand. So what I would suggest doing, there's a tool in Google called Auction Insights. So go to your brand campaign, select Auction Insights, and it will show every competitor who's bidding on your brand. And within that, the most important metric and column in there is percent shown top of page, right? So you find what is the minimum amount of money I need to spend to show 95% of the time for my branded keyword search to maintain a 97 to 100% top of page rank, is how I think about it.
Perfect. Perfect. Okay, we got time for one more, and then we're really going to let you go, Kevin. Elizabeth,
Yes.
is there one more?
Yes, one more question
Last
here.
question, last call.
Okay, Mindy from Westminster Bank. Kevin, since you are doing personal loans, have you had any success with other channels such as Meta or connected TV? My agency keeps proposing programmatic because of the very low cost per impression and great reach.
So programmatic can be tricky. Programmatic largely depending on what DSP you're using, Trade Desk, and your utilization of data through, I mean, if it's through Trade Desk, it's LiveRamp. So being really, really, really hyper focused on how you target. Agencies will typically push you towards programmatic, because programmatic is essentially endless. You could dump as much money as you possibly can into programmatic. So I would be careful there. I am a proponent of programmatic in the same way I am of retargeting. Think of it as an upper funnel marketing technique that's going to drive more brand conversions and organic conversion. So my suggestion there would be certainly test it out, start small, and scale as you see fit.
Yeah, if I could chime into that, I think the thing about programmatic is really about the quality of the inventory. So if your ad for a financial institution is running inside of a blog post on money management, if it's one of these Substacks where people are, or Reddit, where they're just going off on how to squeeze that extra, 25 basis points of yield on a money market account, fantastic. It's cheap and you've got the right audience. On the other hand, if your programmatic is running on a gaming site and it's Candy Crush and you got to look at this ad to be able to get to the next level, it's probably not going to work for you.
Yeah, absolutely. And also, I mean, there's other variables that go into programmatic, like, content, A/B split testing between display ads. I'm not sure if you're going to end up using programmatic for OTT or connected TV and things like that. But done correctly and scaled correctly, fantastic for brand building.
Okay, it is 45 past the hour, Kevin. We are so grateful for all of the insight that you've revealed, tips and tricks. We're gonna put a link in the show notes and the follow-up email to this auction insights tool that you mentioned, so people can go and check out, what they should be spending on the keywords. Thank you so much. This has been amazing.
Carlo, you're the man. Thank you.
All right, you all take care.
All right. See you.
Bye-bye.
Bye.